The steep oil price drop has some worry the global stimulus that we were hoping for just isn't coming. Commodities analyst Sal Gilbertie joins me down the line. Nice and easy beginning. Let's talk about where the bottom is.
I don't think we've seen where the bottom could be yet. In commodities, it can be zero, actually. But in oil, I think realistically, years ago, oil traded in a very narrow trading range with the top being about $35. And I'm convinced, being an older commodities person with much experience, that oil will test $35 again. Things tend to go farther, faster than you think. So I think an expanded trading range right now of oil between, say, $25 and $65 is reasonable to assume.
Let's talk a little bit more about this new normal in prices, right? This China slowdown has many beckoned to accept that the shelf is just set lower now.
I think that the China slowdown helped the Saudis in particular realize that a global slowdown could hurt everyone very badly. And in particular, the oil producing nations understand that oil stimulus is better than paper stimulus anytime. You see QE2, you see the Federal Reserve injecting money, you see the Bank of Japan injecting money. There's a lot of stimulus, but it's monetary and it's indirect. People really don't see it. Individuals and businesses don't see it. Oil stimulus, meaning oil prices go down and people get more money in their pockets every day. It's actually a regenerative stimulus package. It happens every single day. Each of us has more money to spend. I think the Saudis know this. They are the swing producer of the globe, and they realize that they can do more to help the global economy than anyone else by keeping oil prices low and affordable. So I think that the Saudi production increases that are steady and they're not backing off, I think they're with us for quite some time, and that will help China get on its feet and stabilize. It'll help the globe grow.
Okay, now let's talk about geopolitics. Of course, an obvious cause for further market volatility. We could be years till Syria settles down. What type of investors do you think can really grit their teeth and prepare for the long game?
In Syria, I'm not really sure. I think they're so unstable there. There's so much political uncertainty. No one even knows who controls territories, never mind companies. No one knows what type of sanctions will come in. I think it's a very uncertain future in basically the whole peninsula there. I think it's very uncertain.
Can you tell me about your outlook for supply?
Global supply of oil, I'm very optimistic. I think, again, the Saudis are the global swing producer. They're going to produce as much as they can. I don't think they're going to let the prices of oil, collapse and go into the 20s and stay there. I think they are pretty happy probably with $50 oil or sub $50 oil slightly. There's a balance that the Saudis know is out there. They've seen it before. They're experts at finding it. When China had double-digit growth, the balance was around $100 crude oil. Now that the world has to get accustomed to China in single-digit growth, I believe that double-digit growth is a thing of the past, and I believe triple-digit oil is a thing of the past until we get back to double-digit growth somewhere in some major economic driver of the country. So I think oil prices should stay $50 pretty stable around the $50 mark, I would think.
Finally, we've discussed all the elements of this bleak outlook. There's got to be some winners in there.
No doubt, consumers. I think anyone who's an energy end user, anyone who's a consumer, any transportation company, any big energy user, anyone who has a consumer as a target with extra people who have extra spending money in their pocket are going to put it one way or another. Whoever can capture that extra oil money, those are going to be the winners here.